Hi, my name is Naomi, aka Nifty Nomi, and welcome to my channel, Be That Business. I'm a Canadian bookkeeper and new business educator, and I help entrepreneurs look under the hood to see how it all works. I'm fighting the good fight against double work and against giving CRA more money than you have to. Today, I'm going to talk about the Reimbursements Expense GL account that is created and used by the QBO Payroll Module in QuickBooks Online. I'm going to talk about its drawbacks, how to correct for those drawbacks, and show how using a process of expense reports is a much better method for reimbursing employees for company purchases. Let's take a look now. So here what I have is a paycheck that I have entered for an employee called John Doherty, and you can see that there is a reimbursement of $113. So let's assume that John went to Home Hardware and got something to part of the job that he was on. He needed to run to Home Depot and grab something. It was $100 plus tax. And the company wanted to reimburse him for that purchase made with his own card or cash or what have you. And so when you go to add a reimbursement pay type in QuickBooks, it offers one up for you and you can select it and you can give money back to John Doherty. What's the problem with this? Well, let's go over to the profit and loss, and we can see that this is just the one check that was created, that it just went to a reimbursements expense account. And reimbursements is such a generic name because what expense is that? Is that cost of goods sold, office supplies, purchases, materials, repairs and maintenance, auto gas? Like, what is it? But more than that, you're losing the HST input tax credit. So I'm in Ontario, where the example is of maybe an expense that was $100 plus $13 HST. And when it's put in this way, not only is the $100 not going to a helpful or informative GL account on the profit and loss, we're also losing the $13 HST input tax credit that the business should be able to get back from CRA. Another issue is if the business is looking at their profit and loss monthly, a month over month cost analysis, then if this item was purchased in, say, February, and the business wants to see that expense in the February monthly profit and loss, when you're claiming or entering that quote expense the date of the paycheck, you're going to lose that timeliness of that expense going into the right month. One way I think that this could theoretically be corrected is if the reimbursements GL account, and this is a GL account that QBO has created when I went ahead and added the reimbursements pay type via the QBO Payroll Module. If QBO allowed me to actually say, no, reimbursements is not an expense, reimbursements is a liability account, then I can enter that purchase from Home Depot on whatever date that the cost was incurred, just like a normal expense. I can go ahead and put in the expense, the HST, and I'll feel good. And then that liability on the balance sheet, reimbursements, that would just simply be something that was like $13 owed to an employee. And then when he was reimbursed this way in the paycheck, instead of hitting up the profit and loss, it would hit up the reimbursements liability account on the balance sheet. And then that would go back down to zero. And then we'd have a lovely GL account that we can reconcile to zero each month, make sure that we've reimbursed all of our employees for the things that they've purchased. And so I thought this was a fabulous idea. And so that's what I did, is I said, no, I went into the chart of accounts. I changed this reimbursements GL account to a liability account. I figured I'd solved the problem. And then the next time a reimbursement happened, QuickBooks just created a whole new expense account reimbursements and sort of would not let me do that. It wants it to do it this way. Fine. Okay, so then if QBO is not going to let me do it my way, then how can we resolve this issue? Well, that's the problem with QBO Payroll. They're still polishing it up. I think there's some things that I think need improvement, and I think this is an example of one. If we were to just feel like we're done we're missing the HST and it's not going into the right expense account. So if you are having to use QBO payroll for whatever reason, then either you're going to have to do this monthly housekeeping task that I'm about to show you, or opt instead to use an expense report style entry and reimburse the employee outside of payroll, which is what I suggest. First, if you're here, you might have already reimbursed your employee and want to put this in the right bucket. No problem. All we need to do is move the 113 out from reimbursements and put it into its correct GL buckets. We can do that two ways. We can do that with an expense entry, or we can do that with a journal entry. So I'm going to go ahead and do that with an expense entry. I probably could show you how to do it with a journal entry as well, but here's the expense entry. And let's say it was a Home Depot purchase. And the payment account we're actually going to say is cash. And then the payment date, because in the profit and loss it's in March, in order for us to line up and empty out that bucket for March, let's keep it with that March date, and we'll address how to fix that with the expense entry, with the expense report way of doing it in the future. And let's say that it was purchases and it was $100 plus HST, and then you would just put reimbursements in here, right there. Too bad we can't pull it right out of reimbursements here, but because it's an expense entry, we have to use cash, and then we can go minus 113 and then add a scope. Okay, so that's way one of doing it, and I'm going to just duplicate and show you the journal entry way of doing it. The journal entry way of doing it is not using the cash account, that's all. So let's go ahead and put in a new journal entry. And I'm going to put that towards purchases. And I'm going to say $100. And you have two options when you put in a journal entry and you want to record the HST. First option is you can just put HST on purchases. Remember, make sure it goes to the right line on your GST HST filing by saying right here that this is on purchases. Very important. And you can see now that it's 100 plus 113, so the total of the debits is 113. And then the other way of doing it, so sometimes if you're like, it's not 13, it's 5 or whatever you want it to be, we can actually just put it here, GST HST payable, and we'll put the $13 there. But you still have to designate what line on the GST HST return you want that. So just make sure that you put that to HST ITC. It's an ITC input tax credit on purchases. And then we can go ahead and just offset the reimbursements by 113. So this is the other way of adjusting for the reimbursements on the profit and loss. So I'm not going to save the journal entry one. We only have to do it once. I'm going to save this one, save and close. And now what we can see is now we have purchases up there and it's not 113. We've got that $13 now as an HST input tax credit, reducing the GST HST payable for the period. So that's very important. And it's no longer in reimbursements. If we were to click reimbursements, you would see it go in and out. And that's why I call this housekeeping. You're going to have to do this every month if you continue to use the reimbursements through payroll. Now, whether you're doing payroll with QBO Payroll, or if you're doing payroll with any other software, putting the reimbursements in with the checks actually makes more work. You think it would be easier, one transaction less, but it's not. If you were handwriting checks and people just saw that John got a paycheck, all of that might just go to payroll, right? Payroll wages expense when they put it into the bookkeeping. So that's a bit of a pain in the butt. So the idea is if you pay employee reimbursements, it's actually not easier to put it through payroll. It's much easier to put it in with what I call the expense report way. Now, You don't have to have an official expense report that you do with your employees. You can if you want, but let's look at, from a bookkeeping and record keeping perspective, what that would actually look like. Let's say that John Doherty actually bought this Home Depot thing, right, in February, and you want it in February, even if you're going to pay him on March 20th or whenever your office admin has the time to do so. So let's go new, and I'm going to put it in as a bill. Okay. And I'm going to say, and this isn't fixing the reimbursements. This is just moving forward to avoid the reimbursements and the housekeeping and all the extra work. This is what I would suggest. So we're going to say John Doherty. Let me put his name in full. Now his name isn't in there because he's an employee, but I don't want his name as a supplier. I want to say expense report. That's what this bill is. It's John Doherty's expense report. So let's add that new supplier. And that was actually at some point in February. And now we say purchases here. All right, purchases and materials. And here's where I would say Home Depot. And if you're reimbursing for multiple receipts, put in that date. So February 12th. 2025, like this. And then it's 100 plus HST, and you're getting in all of the details right now. So the reason I'm putting Home Depot here and not up here is because when you pay him, it's actually going to be a check to John Doherty, not to Home Depot. Also, if you're reimbursing for other stuff, I don't know, maybe auto gas, like this, then you could say, Petro-Canada, February 5th, 2025. You could put all the February expenses in here, and that would be one way of doing it. And the added bonus is lots of fun bonuses here. The added bonus is now you can actually attach the Home Depot receipt, the Petro-Canada receipt, and if your business is using actual expense reports, you can also attach that right here into the bill entry. So we were just talking about the 113. We would hit save, and then you can go ahead and pay John Doherty anytime that is part of the procedure. So maybe you did pay him on the 20th, and you can send him an e-transfer, or you can write him a check, or you can reimburse petty cash. There's so much more flexibility when you put those entries in as an expense report bill with a bill payment. So I'm going to hit save and close. And now if we go back and we look at the profit and loss, we can see that the reimbursements GL account isn't touched at all. And the actual purchase of those expenses are in the correct month. So your month over month profit and loss cost analysis is maintained. Now it does look like it's in twice, but that's because we did put it in twice. I was just showing you how to do it with the reimbursement way. So this is what I suggest all of my clients do for if they want to reimburse their employees, is to use the expense report method, whether they actually use the report or not, but that way they can make sure the expenses go in the right place. It's separate from payroll. There's no housekeeping on the profit and loss at the end of the month. There's no zero line for reimbursements, which annoys me as well. It just feels so much more cleaner and simpler and a lot less work. If you found this video useful, don't forget to subscribe to my channel. I'm also on Instagram at BeThatBusiness. You can tweet at me, X at me, I'm NiftyNomi, and I'm also at NiftyNomi on Twitch and TikTok. And you can find resources and courses about running a Canadian business on my website, naomiwilkins.ca. I love making business make sense. The video today was recorded in beautiful Newcastle, Ontario. Thanks for watching, and get out there and be that business that thrives.